Hey everybody, Spartan from SpartanTrading.com. I want to hit you guys with a trade review today, and specifically what I want to touch upon is trading options. Now, this market is a lot different from what the market's been like in the past month. I would say it's completely changed. And by the way, the date right now, if you're watching this video in the future, is it's March 18th, 2021. But anyways, so the option market has completely changed. Now, what we're seeing right now is VXX is at all-time lows or near all-time lows. What has happened because of that is you're not getting that premium volatility that we would typically see on an option. Typically when volatility is higher, when premiums are higher, obviously, when volatility is higher, there's more premium on each contract, and the premiums will move quicker because there's more volatility, there's more range. Now, as premium or as volatility comes in, the effect that has on premium is you get less of a movement, especially on out of the money contracts, on any sort of move that's within your direction. So what you're having to do in this type of environment, when you get VXX coming in like it is you got to go, if you're, let's say, a day trader of options, you got to go closer to in the money. And you may want to go, if you're taking things that are out of the money, out a week, out 2 weeks, because at least those will have a little bit more premium built into them because of the amount of time remaining. So that is how it's kind of changed, and you have to recognize these situations and change with them if you want to effectively, day trade options as well as you were doing before. Now, a month ago, it was a lot easier. We had the range. VXX was still quite a bit higher, and you could get these bigger percentage moves on these contracts. Not so much anymore. You can still get them, but you don't see them as often, which makes things a little bit more difficult unless you kind of switch up what you're doing. Now, like I kind of said, guys, the best thing that you can do is, let's say you're playing a weekly contract. Typically, go out a week. Take next week's expiration, and you could still go a little bit further out of the money and make a decent percentage if you're right in terms of your direction. Now, when you're wrong, at least you do have that week expiration as cushion, where you're not going to see as much volatility to the downside. The issue with playing weekly contracts right now is this: you don't get as much of a move to the upside when you get increases. So there's less volatility, the premiums increase less to the upside, and when you're wrong, these things do come in. So let's say you're wrong for a bit, you don't get stopped out, the option's going to come in, and when you get a push back to the upside, you're going to see the option price not really move even close to or less likely to move close to where your entry price was or put you in the money. So you've got to be pretty selective in regards to how you deal with options in this market, in my opinion. Now, I want to show you two that I did today, OSTK, and let's talk about USO, and that's kind of more of a directional trade, because I think there's kind of two ways to do things. Now, breakout trades, especially on the daily charts, which is what I typically go after. In this case, I was looking at the OSTK crossing the 50 MA on the daily downtrend break, and then basically looking for it to take this 77.55 level out for continuation on the upside into the next resistance levels, which in this case were $82, which it got to. Great. In a market with a normal market with normal volatility, I would probably just go after the weekly contracts. Today's a Thursday, by the way, when I'm talking about this. So 1 week out or 1 day out expiration, and I'll take something that's decently out of the money that I think can get in the money, and you'll see a fairly huge percentage move on something like that if you're right in regards to it getting close to or in the money. Now, instead what I did, because I know that options weren't moving and haven't been moving this week like they typically would move in a higher volatility environment, or an environment where VXX is higher, I should say, where premiums are more juiced up. What I did was I took next week's out expiration. So by taking next week's expiration, I give myself that premium associated with that time, and because of that, you're still going to get decent movement in the contracts. But if something doesn't work right away, it's not going to decay like crazy and be unable to come back if you eventually be right. The issue with shorter expiration contracts is you can be wrong but right at the same time, whereas you're wrong out the gate, it comes in, and then you're right in the end, but you don't make money on the contract because it's just decayed too much, and there's not enough time and premium to move the contract back to the upside. So let's talk about this OSTK trade. So the OSTK trade was some 80 calls I took for next week, and we'll actually pop this up on screen here. Let's actually go like this. We're on a day still. Let's go to There we go. So 10-minute chart. So the stock started to break out, and we can flip this over to OSTK's intraday chart, which will help us understand what's going on. So obviously this stock broke the downtrend, started to push to the upside. That's when I, took the 380 contracts. You can see the execution right there, around 290 actually. Let's actually do this as well, which is pop up the transaction so you can see it. It can make life a lot easier than me just explaining it to you. Sorry guys, one sec. There we go. So you can see the transaction. So grabbed a bunch, 290. Stock started to push to the upside. I sold some at 410. About, I think it was half the position. As it pushed to the upside, I sold 3/4, or actually a little bit more. I had about 1/8 left when it got to 620. So it was up over 100% on the position. And then I just had my stop set, and I was just moving it up kind of as it was coming back. And then I got stopped out the rest at 355. Now this trade did take, a decent amount of time. I mean, it was roughly an hour and change, and then I got stopped out of the last piece about 2 hours, 3 hours later. But it was an all-day trade. It did what I wanted it to do, which was push into that 82 resistance. Obviously, I wanted to get more on it, and I hoped that it would continue to go to the upside. But you got to play with what you got, move your stops to the upside. So in this environment, I think going out a week is a good idea. You might pay a little bit more, but you're still going to get these bigger or these decent percentage moves in those contracts without having to worry about all of that decay and whether or not you're going to be able to get a continued push after it comes back, if you end up being right. Now, that's one situation where I'm looking for a daily breakout. Now, another situation that I'll look at, and I still think you can do weeklies on these, and these will be fine, is you look for directional moves. Now, something like a directional move would be something that is within a trend and continuing to go to the upside or to the downside. Now, what you want to look at in terms of one of these situations, and this is a USO example, USO was selling off at the end of the day, right? And it was bear flagging at this point, was breaking down. I actually ended up getting into it like right down here when it was creating another little bear flag. And it was like, let's see where that is. Let's say 40.80. Yeah, so 40.80, we're like up here. What I'm looking at on the daily is at that point, it wasn't at the 50 MA yet, but I could see, okay, that's obviously the next support on the downside, as well as that 40 level. And I think it's the 50 MA is going to act as a magnet, 39.43. So what I did is when it was at 40.80, let's call it, I ended up taking USO 40 puts because I figured they can get close to or in the money because that's where my target is. And I paid, not a lot for them. I believe I paid only 23 cents. Again, let me just pop this up for you guys so you can see it. Yep. So paid about 23 cents for them. And then we can see that, I sold a bunch at 32, which is 32, 33, which was about 1/2 of the position. And then I sold another 1/4 at the 100% mark. Well, actually just above it at 50%. And then I swung a little bit just to see if it could maybe break that level tomorrow. I can make a little bit more on the overnight. So when you get directional moves in this type of environment, I still think you can go after those over the money weekly contracts. You got to make sure that it does still have the room, of course. But the fact that you do have the trend on your side means you're going to have a higher probability of being correct. And especially if it's to the downside, you tend to get, further or larger moves from a range perspective to the downside. Especially when we have the market stuck in a consolidative pattern. That's just the price action that we've been noticing lately. So I think it's a good idea to still go after directional names, and you can still go out of the money on them, but don't go too far out. I mean, it was at 480, let's call it, or 470, and I went after a 40-cent contract, which, that's fairly close to, obviously getting in the money there. So, this isn't rocket science or anything like that. This is just logic, and this is just being able to understand the situation, applying it. I think sometimes it just makes sense to hear someone say it where you go, oh yeah, that's obvious, and then I should start doing that. I think, just assess what's going on in the market, and then based off of that, adjust to it. Simple. The market won't stay like this forever, and eventually we will see, VXX push back to the upside, volatility come back, premiums come back into the options, and things like that. But until we do, you have to adjust your strategy. And this is the way that I've adjusted mine. Usually I'm a strictly weekly options day trader, but going after next week's contracts makes a lot of sense in this type of environment. Makes it a lot easier on yourself. And for me, what I've seen is the probability of these trades working is much higher than if I go after weekly. So that's that. Just a quick little update, guys. I figured there would be a decent little lesson in this. So hope you guys have a great rest of the day, and I'll talk to you guys next week.